In this video, I'm going to show you the crucial lessons that we learned, what was at stake, and how we basically didn't sleep for almost 2 years while trying to navigate this. Stick around so I can show you the pitfalls that we went through, again, the sleepless nights, and what you can do to avoid all of this. Hi, and welcome back to the channel. I'm Will Schroeder. I'm the founder and CEO of Startups.com. I've been a founder for 30 years across 9 companies with 5 exits, and I'm here to show you exactly what it took to get through all of those startups. Every day I get to do my dream job, which is helping founders just like you. I get to help you see around corners, to solve hard problems, and understand the best and most efficient ways to scale a startup. So today we're going to dive into a tough lesson about what can go wrong even after raising a significant amount of funding from top-tier VCs. If you're ready to learn from some real-life experience that can help you shape your strategies and optimize your approach, you're in the right place. Also, don't forget to subscribe for no-filter advice and real-life insights on how to build your startup.
This is such an amazingly illustrative story of the fundraising process, but take us all the way back to the beginning with where it started. Talk us about stomping up and down Sand Hill Road and how all of that went.
So in 2006, we started one of the first buy here, pay later companies called Afford It. It was basically what Affirm and Klarna are now, only a decade ahead of them, which wound up being the problem. But we were able to raise from top tier VCs like Founders Fund and places like Bessemer almost overnight. We had 9 major investors participating in the round, and we had so much hype running around this company because of how big it could be. So initially, when we got into it, it couldn't have started off better.
So you had success at the fundraising level with 1.2 million in the bank now. Talk about how did we determine whether the business itself was successful? The fundraising was successful. What about the business?
Business took off overnight. It was I've never seen anything like it. The moment we launched the product, and I remember the initial product was we'd allow people to buy consoles like an Xbox or a PlayStation for $19 a week. And no surprise, when you offer people a $19 a week Xbox, they buy lots of them. We barely advertised it, and we sold $500,000 worth of product within the first 4 weeks. We don't even knew what we were doing yet.
Fast fundraising success, fast market fit, and people are buying. Where does it start to go wrong here?
Well, actually, the success was the downfall, because as soon as we saw that level of take rate for what the business was, the next thought was, if this thing can do 500,000, it can do 500 million. And we immediately went back out into the market and we said, we're going to need probably $10 to $50 million as our next round. And at first, everyone was all over it. They thought it was the best investment ever. And then a funny thing happened. The financial crisis. Nobody saw it coming. And all of a sudden, we went from darling of consumer finance tech to the evilest thing, which is high-risk consumer finance in the eve of the financial crisis. I've never seen a turn so fast, almost overnight.
In hindsight, was there anything you guys could have done differently? The market shifted, moved away from you in the sense that all of a sudden subprime lending for consumers was not an awesome thing and you're not going to raise any funds. Was there anything at that point you guys felt like you could have done to try to change the trajectory of the outcome?
At the time, we had a handful of VCs that were jumping over each other to give us term sheets. Our biggest challenges in discussions at the time in our boardroom, which is what's the biggest valuation we're going to take? Within 3 months, not a long period of time, it was, is there anyone that will even talk to us? At that point, we were doing 5 meetings a day on Sand Hill Road, talking with every VC that was out there and getting the door shut in our face nonstop. That's 90 days from the point where everybody was handing us term sheets as fast as we could accept them.
No, man. It's pretty clear what happens next, but walk us through it, right? Read us the eulogy.
What really killed us wasn't just the timing. Obviously, the timing was bad, and you can't say it was a bad product idea because multi-billion-dollar companies have been built on the exact same idea. But the timing was awful. What I actually think was my worst mistake was not realizing that a change had been made. I looked at it as, yes, okay, apparently there's a little bit of sentiment that's changed, but we'll motor through it all the same. And the truth is, there are certain defining moments that if you don't accept what happened, and make a totally different pivot or change, you are going to just get rolled over by what's happening. And we didn't have the experience at the time to understand why that was so important.
Can we do a quick inventory on some of the costs outside of, right, the success of the business? But what were the tolls like, right? So financially, personally, emotionally, how did this impact your desire to go forward and build more companies, which clearly you've done? We happen to be running one right now. How did all of that play into what happened next? And how did you survive the end of that and transition into the beginning of what was to come next?
What transpired next would be the equivalent of a car accident of my ego and self-worth. Because essentially what happened before that is I had built a huge company that's now a $6 billion company. And in my mind, you just keep doing that. You keep building more of those. I'd built a couple of successful companies after that. I had never failed at anything. And it's not to say that I was so good at it. I just didn't have any experience at it yet. And when something was failing and I didn't have any cues to see what failure was like, I was a deer in headlights and I got completely run over. While anyone else would have said, stop doing this, stop banging your head against the wall, this is the wrong product, it's the wrong time, etc. I said, can't be done. I'm going to spend the next 18 months nonstop, 100 hours a week, trying to do everything I can to save something that doesn't even want to be saved. Not because anybody else cared. My investors had already written it off because I didn't believe that I deserved to fail.
It's about how you transition. So many founders are going to go through this shit. They're going to go to failure. It's about then what to do next.
Right.
One of the things that I know you and I see a lot is that then people will apply hindsight to what they did. If I had done this differently, if I had done that differently, and then I think that can totally skew what they do in their next business. So if you had said, shit, we should have just raised more money sooner, and then we would have been okay and we would have made it through that. So I think there's a lot of things that when we go back and we look at things in hindsight, that it can completely fuck up our next steps.
All right. So I got raised for growth, but planned for zero money. Like we only planned for growth. We had no concept for what would happen if the money would run out. And that was a huge mistake because the market turned in a way we couldn't respond.
Yeah.
The other point, and this is an important one, get out. There is some point where you're not helping yourself anymore and you're just running yourself into the ground. And I let this business, and I really did. It was the worst 2 years of my life. And it just ground me to nothing.
All right, man, this is amazing. Why don't we wrap this up with what were the key lessons? Clearly, you took away some learnings from this because you're still here to talk about them. What were those key learnings?
The first one seems obvious in hindsight, but yet people still keep making this mistake. Raise for growth. Get out there and try to raise for growth, but make your actual plan for no growth. Being as lean as possible. You should try to stay lean while growing. You shouldn't make all the plans based on we have to raise money and that's the only way to save us. That works out great. Never. The second thing was listen to what's actually happening. Every single person was telling us this is not the time. Everything has changed and you should respond accordingly. You should keep lean, etc. I did the exact opposite. I said, oh, that's cool that every single indication is that I should stop doing this, but I think I'm just going to keep on doing it anyway, which was a complete mistake. I just stopped listening. The third one was the most important. I went through this process and it ground me to nothing. It was the most abysmal failure I'd ever had. And here's the best part. It was avoidable. I put myself in a position where I wasn't spending time with my family. I was just in a mental and physical awful place. I didn't even look like the same person. And I never even thought to just stop doing it. The lesson I learned is you can just stop doing it. You don't have to do things that put you in danger, both mentally and physically and financially and all of these things. You can actually stop. You can quit. You can stop doing what you're doing that's creating this negative behavior and move on to something more productive. And it's a lesson I learned that I'll never have to learn again. Hey guys, thanks for joining me today. I hope what I'm sharing with you can give you some insight into what this process actually looks like and maybe give you a little bit of guidance if you're going through the same thing, because all of us are trying to manage exactly how to do this. You've got to remember too that raising money isn't necessarily the easy part, but that's just the start. From there, we've got to have careful planning for how we're managing our budget, how we're managing future fundraisers, how we're managing growth, etc. And as importantly, how we're managing ourselves throughout this entire process. Also, if you found the video helpful, please please follow the channel. And absolutely, if you have questions, if you're wondering exactly how I went through this or how startups get through this, add some comments. I'll respond to all of them, and I'd love to hear your story as well. Thanks, everyone. I'll see you on the next video.